Ark Investment Administration LLC's winning bets on disruptive know-how firms cemented Cathie Wood's standing as Wall Avenue's hottest fund supervisor since Peter Lynch or Invoice Gross. Now, these gambits threaten to make Ark a high-profile casualty of the current shift in investor sentiment away from tech shares and towards cyclical shares tied to an financial upswing. Ark runs 5 exchange-traded funds that actively spend money on firms Ms. Wood and her group of portfolio managers consider will change the world via what they name disruptive innovation. Among the many ETFs' largest holdings are electric car maker Tesla Inc., funds firm SQ Inc. and streaming media agency Roku Inc. The inventory costs of these 3 firms have surged at the very least 195% within the year because the COVID-19 pandemic upended the investing panorama, serving to Ark's funds more than double over the same period. However, the shares have dropped greater than 20% since February 19 within the midst of a broader sell-off in fast-growing tech shares, a droop many attribute to a sharp rise in government bond yields. They've badly underperformed the tech-heavy Nasdaq Composite Index, which has fallen 5% over that very same interval. The inventory market's swift flip towards know-how and different development shares has handed star inventory picker Cathie Wood and her agency, Ark Funding Administration LLC, their hardest take a look at but. The agency's 5 exchange-traded funds all have declined greater than 23% since early February, stung by a pointy rise in government bond yields. The flagship Ark Innovation ETF has suffered the steepest declines, falling 31% from its February 16 excessive. As compared, the Nasdaq Composite Index has dropped greater than 10% over the identical interval. Generally known as Mama Cathie by particular person traders on Reddit's Wall Street Bets discussion board, Ms. Wood touts in movies and podcasts her strategy of investing in what she calls disruptive firms, ones that she contends are destined to alter the world and develop tremendously. Her bets vary from investor favorites like Apple Inc. and Tesla Inc. to pandemic winners corresponding to Roku Inc. and SQ Inc. to little-known 3D printing agency Stratasys Limited and Israeli therapeutics firm Compugen Limited. These gambles paid off handsomely final year, when Tesla jumped more than 700%, SQ added 325% and Roku rose practically 150%, serving to Ark's ETFs greater than double. Ms. Wood earned huge acclaim as the most popular inventory picker on Wall Avenue, however her star has fallen over the past 2 weeks as long-term rates of interest out of the blue marched greater and traders deserted the expansion commerce en masse. Talking on CNBC Monday afternoon, Ms. Wood added that the sharp rise in bond yields has shaken up traders, resulting in a number of confusion and a little bit of paralysis. A speedy rotation into worth shares out of development shares isn't serving to, she added. Contained in the cult of Cathie Wood, the rockstar stock picker whose ETFs are dominating 2021 this year has belonged to Cathie Wood. You may argue final year did too. The founding father of Ark Investments has seen flows into her lively exchange-traded funds beat these of huge franchises like BlackRock's iShares, due to her blockbuster 2020 efficiency, which was pushed by bets into mega-growth shares like Tesla. Her funds have delivered eye-popping returns, together with her flagship fund up greater than 150% in 2020. Wood has constructed such a big following that an announcement a couple of new Ark fund moved markets. Her podcast has landed big-name friends corresponding to Elon Musk. She's changed into a favorite of the Wall Street Bets crowd. Insider spoke with traders in each Wood's enterprise and funds, longtime colleagues, analysts at her agency, and followers who chart her rise via newsletters and memes. They describe her management, which comes with a long time of investing expertise, and her curiosity, which retains her analysts on their toes. However, threats are additionally looming. Speak of a stock market bubble and an impending correction are brewing. The simple circumstances created by huge fiscal and financial stimulus may taper off because the economic system recovers from the pandemic, and Wood's extremely concentrated funds have ballooned, which has raised issues about capability.